Hi, what is a modern commercial bank? What is a savings account? What is a current account? And then fixed deposit, then recurring deposit. So these are the topics which I thought I'll cover in this video. A modern commercial bank. What is a modern commercial bank? It's a financial institutions that carries the dealing of currencies and then related to deposits and withdrawal to the general public, and then providing loan for investments and infrastructure developments or for running the companies. Banks are profit making institutions. So what are the four functions of a bank? First is accepting deposits. Then the most significance is for the purpose of lending. So accepting deposits and providing loan. And then they create credit creation, transfer of funds from one place to another place, and then they do agency functions. These are the four functions they do. When was the first modern commercial bank formed? It was formed in 1806 in Calcutta. It's called Bank of Bengal. Then two other presidency banks were formed in 1840 in Bombay and 1843 in Chennai, which is Madras. Who invented money? So in this session, I'm going in the form of a question and answer so that it will be little absorbing and interesting for you to follow. Who invented money? So until 5,000 years ago, the Mesopotamian people created the shekel, 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 which is considered the first known form of currency. Gold and silver coins date back to around 650 to 800 BC. Why is money called a currency? Currency has to be derived from the Latin word curate. The spelling is C-U-R-R-E-R-E, which means to run or to flow. So that may be the reason that it is called currency. So it keeps moving from one hand to another hand. Okay, now coming to this is some of the historic facts about banks and currency. So what is a savings account now? Savings account is for the purpose of savings, where there will be for salaried 1 credits or 2 credits for some reimbursements, and only withdrawals will be there in that account. To encourage the habit of savings, RBI has permitted banks to give interest on the balances available in the savings account. The interest can be, it was earlier regulated, it was close to 4%, 5%. Now it is deregulated. Individual banks can decide upon paying the interest. Some banks pay the interest on the daily balance, end of the day balance, at the end of each quarter. Some banks pay at the end of the 6 months, so half yearly. So both are permitted. Okay, what is the various types of savings account we have? They are the regular savings account, which is having some minimum balance requirement, and that again differs from bank to bank at the discretion of the board of the bank. Then zero balance savings account is there, women savings account is there, kids savings account is there. In the kids savings account, they will have a card, ATM card given, but some withdrawal restrictions will be there. Through ATM 1,500 rupees, through point of sale 1,000 rupees. So that kind of restrictions individual banks keep on the kids savings account. And then senior citizen account is there. Under senior citizen account, the savings account will have the same interest rate. There is no difference on that. Then family savings account, where one account can have the minimum balance required and the remaining account can have zero balance, can be attached to the main account, but the main account should have the required balance for that particular scheme code. Then salary account we have. What do you think is the risk of the savings account? Risk of savings account is we have very less interest rate comparatively. and minimum balance requirement is there. If the balance is not maintained to the required level, the account gets charged end of every month. So what is a current account in a bank? Current, you must be aware, current account is an account where business operations take place and the credit and debits will be huge in that account. It again goes with the profile of the firm. Then what is the use of a current account? The use of current account is to service the needs of the business. So many inflow will be there, many outflow will be there. What is the difference between a current account and a savings account? Savings account is a deposit account which allows limited transaction, while a current account is meant for daily transaction. And savings account has interest given by the bank, and current account there is no interest. Can I withdraw money from the current account? It is also known as demand deposit account. On demand, the banks will keep paying that. So amount can be deposited and withdrawn at any given point without giving any prior notice. And this transaction should happen within the prescribed banking hours of that particular bank. Each bank has varied timings, 9:30 to 3:30, 10 to 4, 10 to 2. So depending upon individual bank's timings, the withdrawal and deposits can happen. Who can have a current account? Current account can be opened by individuals, partnerships, private limited, public limited, and trust cooperative societies also. Formalities of opening an account: earlier with only introduction the account gets opened, but now you require know your customer documents, KYC. Why current account has no interest? Current account do not earn any interest because of the liquidity they offer. Current accounts usually do not carry a limit on the number of transactions which can be made, and hence the interest is not being paid. So how to open a current account? Check the eligibility on the bank's site depending upon the type of account you need to open. Then download the account opening form, fill the account opening form, attach the necessary documents and submit to the bank. Now, the third account which is very popular is a fixed deposit account. What is a fixed deposit? What is fixed in the fixed deposit? Everything is fixed. The starting date to end date is fixed. The amount is fixed. The period, the percentage of interest is fixed. Who can withdraw the money is fixed. So everything is fixed in a fixed deposit. That's why it is called fixed deposit or a term deposit, because it is for a particular term it is being done. A fixed deposit is a type of account opened with the bank where an assured rate of interest is paid for keeping the funds for a particular period. Fixed deposits are an easy way to earn returns from funds which are lying idle. What are the disadvantages of a fixed deposit? Low returns. While FD returns are guaranteed, they are not matching to the inflation trend. Liquidity: withdrawing your FD before the due date leads to a reduced interest rate which is agreed upon. So it is taxed beyond a certain amount. Is fixed deposit better than a savings account? If you make a comparison, it again depends on the usage. If you think you have idle fund which will not be utilized for a certain period of time, you can opt for a fixed deposit. But if at all you have a recurring expenses and you need daily withdrawal or weekly withdrawals, then savings account is better. The only advantage is higher interest rate in the case of fixed deposit. Is 5-year fixed deposit tax free? There are certain banks, certain types of accounts where there is a lock-in period of 5 years, and under a specific scheme that is opened, that gets exempted under 80C of the Income Tax Act. So tax benefit is available on the 5-year term deposits. And the last version, first we have seen savings account, then we have seen current account, third we have seen fixed deposit account. Now the last one is recurring deposit. What is a recurring deposit? You open an account saying that every month same amount I will deposit in one account, and end of 1 year I will withdraw. Minimum period is 6 months. So normally they will go for 1 year. So month on month on a specific date. Say for example, 1st July you are opening an account. for 10,000 rupees. So 1st August, another 10,000 rupees from you can give a standing instruction or you can transfer. Standing instruction meaning allowing the bank to debit your account and credit into this recurring deposit account. That is standing. You are giving an instruction to the bank to do it on a specific period of time for a specific amount. That is standing instruction. Now, in the case of recurring deposit, for a specific amount is being transferred on a set date to that account for a fixed period. It is equivalent to a fixed deposit. Rate of interest also will be similar to a fixed deposit interest rate. And recurring deposit attract no tax exemptions. So what are the disadvantages of RD? Withdrawing within the lock-in period attracts reduced interest rate. Partial and premature withdrawal comes with reduction in the interest rate according to the period with which it ran. Installment amount is also fixed. You cannot vary depending upon the availability of the funds with you. Interest rate is lower than the investment products. Investment products, what we refer is mutual funds, equity investments, or liquidity funds. There is a market-oriented funds. So depending on that, the interest rate also lesser in the case of recurring deposit. Recurring deposit is also called monthly deposits. So these are the 4 variants we have seen. So we have seen the commercial banks, we have seen savings account, we have seen current account, we have seen fixed deposit account. And the last one which we have seen is monthly deposit or recurring deposit. I hope this is beneficial for the students as well as new to bankers. Thank you very much for patiently watching. Bye.